Are you still holding meme coins even after they've crashed 90%? In the next few minutes, I'm going to reveal common reasons why you keep getting wrecked on meme coin trades. I'll show you better exit strategies that you can use. And just remember, these massive losses are completely avoidable and they really damage your P&L, so there's no need for them. So let's get right into it. The first reason is a more simple one. It's entry point. So where you're buying in on a coin. Now this was a coin that was a brand new launch a few days ago and it was trending. And I've mentioned this on videos before, but if you're seeing something go up vertically in a straight line without any pullbacks, and you're randomly aping in at 17 million or 18 million without any thought of what you're doing, where you might be wrong in terms of your strategy, what kind of target price you could be going for here, then you're setting yourself up to take massive losses. This is called, or you could almost call this top blasting, when you're literally buying tops after massive pumps here. Now, this rarely is going to be profitable in the long run over a certain number of trades. We all can get emotional when we see prices just going in a complete straight line. So don't do that. So think about your entry points. If you're going to enter into these trades, look at important support and resistance points. So for example, any new launch, you'll see as we go up, we get this kind of stair pattern where we have support levels and we have resistance levels. And also there are psychological resistance levels. Those of you who've been following me for a while will know this. 5 million is an important level, 2.5. 1 million is a major level. Minor levels are ones like 3 million. These are levels where you get support and resistance. So if you see something that ran to 5 and is dipping to 1, by all means buy at 1. That's an okay buy. That's reasonable. Don't just randomly buy somewhere in the middle and think that's okay in terms of risk reward, because it's not. Because if you're buying at 4, it just hit 5 and it dipped and you're buying at 4. Your risk reward here, if you think about it, it's basically not very good. Your risk is it going all the way back to 1 where we might get a little bit more support, for example. And you know, where if it goes back to 5, people are going to take profits at 5 million again, especially if that's where a previous high was. So you're taking an awful lot of risk for an awfully small amount of reward. There are thousands of meme coins to trade. You don't have to trade that particular one. So be careful about that. Next, I'm here on Pump Vision. And this is where we see new launches on pump.fun. And I'm using BullX here. If you're interested in using the software, first link in description below. Here I can see brand new creations on the left. And towards the right, we see ones that have graduated, reached bonding curves, so larger market caps. The important point to note here is if you're trading these new ones here on the left, and let's say you have a larger account, so you don't mind putting 30 Solana, 40 Solana into medium-sized or well-known coins like Popcat or something like that. Well, then if you're comfortable doing 30 or 40, in these brand new ones, you shouldn't be risking more than 2 to 5 SOL. So you must reduce your position size on newer coins, because these newer ones, even if they run to millions, they're much more likely to take a 90% dump within a day than more older established coins. Older established ones like Michi and Mudang and stuff like that, it's extremely unlikely in the space of 2-3 days that they could dump 90%. I would probably argue it's actually impossible. However, these new ones, even if they ran to 100 million, they can absolutely dump 90% the next day. Next, and I've just clicked on a random newer coin here. This one's called Gamma. So when you're looking at these new coin launches and you're seeing the price action, you're having a look at the volume, when you buy into it, so let's say I was just buying now randomly, which again you shouldn't do. You should wait for a dip, have a think about where it could be. Like previous resistance is 240. So let's say maybe I wanted to buy the dip there, or I wanted to wait for selling to exhaust itself and us to start an uptrend again. Whenever I buy it, my point is, if I buy in, so let's say I put the buy there, where does price have to reach for me to be wrong? Where does price need to reach? And we need to determine that before we take the trade. We need to have an idea. We could say I'm buying in at 200. So if I see it drop to like 150 or 100, I know that it's probably not going to work out. That's good. That's actually having a strategy in mind. And with that in mind, you can set an automatic stop loss. So for example, where we were before here on BullX, it will automatically take out your position if you set up a stop loss here, a limit order. So if you do that, then you don't need to watch the screen all the time. Because one of the other very, very common reasons people take big losses is they did a good entry. They got distracted. They forgot to set automatic take profits and stop losses and then moved away from the screen. And if you do that, you're risking this dying completely. And it's not the case that it's going to die. You know that it could very likely die because it's a brand new coin. So you know that this could go all the way back to 20k and then it's done. But you would be that one guy who's holding all the way from here to 20k, even though you knew at 150k that it probably wasn't going to go anywhere. You just forgot to do your automatic stop loss and you left the screen. So all that hard work you did about making gains, a 2x here, 2x here, 2x here, and then you suddenly take a 90% loss. It's going to ruin your whole day P&L, probably whole week P&L. So just be a little bit more disciplined when it comes to trading. Next, do some basic background checks just on holders. For example, with this particular coin, just have a quick glance here on the left at holders. Just make sure nobody's holding anything crazy like 10, 15% or anything ridiculous like that. Even 5% or more is considered too high once we've reached a market cap of 200 or 300k. Because those massive holders, they could dump very quickly. Obviously, you can get bundling as well. You can get holders connected and stuff like that. But just very simply, if you see a number here that's just way too high, be very, very careful with that. Next one, go through your old trades. So let's say this was one that was trending recently. Let's say you traded this and you top blasted and you took a loss on it. Fine, no problem. It happens. Go through your trades over the last couple of weeks. Have you been doing similar things? Is this the same pattern repeating again and again and again? Because you'll be very foolish if you're making the same mistakes again and again. So try and correct that. Try and see if it's the same thing you're doing again and again, and consciously see next time you trade, you don't make that same mistake. Maybe it's FOMOing into these trades, or maybe it's catching them way, way too late when they're at very, very high market caps already and you're too late in the game. What is that mistake you're making again and again? Everybody does it. Even I do it. I sometimes make the same mistake again and again. And if I don't stamp it out, then it's going to cause massive problems. That leads me to the next point. And actually this chart nicely shows it. Every time with a meme coin, with any asset actually, but a meme coin especially, you can see clearly on the chart. When we're going up, notice the stair pattern, which I've talked about before. But the top of each level, we're breaking the previous high. So we're making a higher high. Before we make the higher low, we make a higher high. So this was a high and then a low, and then we didn't quite break it there. So that was a lower high. So here's where we would be nervous, or an end there, nervous. But then we did get a higher low, and then we broke this top to here, and then we broke to here, and then we broke to here. Here we got a higher low, nervous again. But then we broke it. However, now we broke this low. So this is a structure break. So basically for me, if I was in this trade here, I would know here, right here, that we're in trouble because the major uptrend has been broken here. We've already got a lower highs in place, and now we're getting lower lows and we're breaking this important neck structure. But also, what are we breaking here? This level, psychological levels. This is 50 million level. It's a key level here that we're breaking below. So this could end up as resistance now. This doesn't mean to say things aren't going to run again. What I'm talking about is minimizing your losses, because we don't know for sure what's going to happen here. We don't know if it's going to go down to 30 million round number and then run from there. You never know for 100% sure. We can only keep an eye on the volume and the price action. The price action is the main thing to go on here. So if we're breaking key levels and you're seeing these lower highs, it might be an early indication that you could be in trouble. So rather than wait for it to completely capitulate like most people, don't do that. Try and be more aggressive with taking losses. Sometimes it's hard to do, but it needs to be done. And my final point, check the socials. So on any of these coins, all you have to do is click on Twitter, click on a website, and just glance at it and just confirm that this is something new, unique. It's a narrative at the moment that's in play. It's a meta that makes sense. And it isn't just some random, crappy, repetitive coin that's just going through the motions again. So for all of these, open up some socials and have a quick look at that, because that might really, really help before deciding what to do with that coin. Because sometimes we make mistakes. We get into something, we think, oh, it's something new and stuff. But then on a second look, we're like, actually, you know what? This meme coin isn't really anything incredible. Hope that helps. Thanks for listening.